Hello and good morning. Thank you so much for listening to this conversation about mortgages and real estate loans for self employed individuals. So, during this conversation today, we are going to discuss some of the myths that occur when it comes to people who are self employed actually getting mortgages and some of the mortgages that are available to you. I am Cheree. I am the area director of Simply Funded, and you can call or text us. You will see our information in the description box. So, first of all, what is a self employed person? It could be anybody from your uh, your driver, your Uber driver, to somebody who's a realtor, bartender, cosmetologist. Let's say you're working freelance for some tech companies, or you have a construction company. You could be blue collar, you could be white collar, anything in between. If you don't have a W-2 salary, you will be self-employed. And for the longest time, it was difficult for self employed people to get mortgages, but not anymore because there are a lot of different programs that are available to you with regards to being self employed. The other thing I will say is you could be self employed full time or you could be self employed part time. So I do have people calling me all the time saying, Cheree, hey, I have a full time W 2 job. However, I also have this part time business. I've been running it for 4 years. Do you think that income can count as well? And the answer is yes, it can count towards your um, towards your income and increasing your income. So, again, today we're going to talk about myth versus facts. We're going to talk about some of the loan programs, how rates work, monthly payments, and closing costs. Number one, myths versus facts. Number one is I deduct everything on my taxes. I cannot get a loan. That is absolutely false. You can get a loan even if you deduct everything on your taxes. Myth number two is I don't have 20% to put down, Cheree. I'm self employed. Uh, does that mean I cannot get a mortgage? That's false. You absolutely can get a mortgage even if you have less than 20% to put down. Uh, there will be other extenuating things that we need to look at with regards to your financials. However, yes, you can get away with not putting 20% down and still getting into a home. Myth number three, you have seasonal income. You may say, I have seasonal income, Cherie. Some months I make a lot of money, and other months I make very little money. Can I get a mortgage? The answer is yes, you can. Yes, you can get a mortgage even if you have seasonal income. Another thing is, I have bad or imperfect credit, Cherie. Can I get a mortgage? Um, the answer is yes, you can. You can get a mortgage if you have bad or imperfect credit as a self employed person. All right, next. I have a full time job and a side hustle. The lender won't count my part time income. Well, it depends on several factors, but we do have lenders that will count your full time job and your part time income, even if you haven't had that part time income for 2 years. Now, it's best for you to have the part time income for 2 years. We'll have more options for you, but there are some mitigating factors with regards to you being able to use some of that side hustle income in order to get a mortgage. You may say, my business is less than 2 years old. I cannot get a loan. Well, it turns out if you have 12 months of revenues coming in and it's more than enough money over those 12 months for you to have enough income to get a mortgage, that you actually can get a loan. So, this is a myth. All right, next myth versus facts. My business is more than 2 years old, but I made less money this year than last year. Can you still get a mortgage? The answer is yes. Now, full disclosure, the bank usually does like to see where you've made more money this year than last year. It will depend on how much less you made this year versus last year. However, if there are mitigating circumstances as to why you made less money, and if it looks like the trend is going up again for you, where you will get back to where you were the previous year, then yes, it is possible for you to get a mortgage. You may say, I haven't filed my taxes. I can't tell you how many people have said that. Cheree, I haven't filed my taxes. I'm not ready to get a mortgage. I'm not ready to apply. The truth is, you don't have to have taxes in order to get a mortgage. There are different loans that we have access to where you're able to get a mortgage even if you haven't filed your taxes yet. Okay, so let's talk about some of the loan programs that are available to you. The first is a conventional loan. If you've been in business for more than 2 years, if you are not deducting a whole bunch of your business expenses from your taxes, conventional loans will look at your taxes in order to tell how much money they are going to add towards your income. So traditionally, when people hear of mortgages, they think of conventional loans and think that's the only way for them to get a mortgage. It's not. Conventional loans do typically have slightly better interest rates, but you're going to be looking at about a month. Sorry, not a month. You're going to be looking at about a quarter% interest rate higher to a 0.5% interest rate higher in order for you to get that mortgage. So, if you're not using conventional loan, sorry. Next is 1099 loan. If you have 1099 income, you can still qualify for a mortgage. You can qualify for a conventional mortgage. And then there are also loans that are just based on looking at your 1099 and not your taxes and things like that. So that's an option for you. Bank statement loans. You are able to get a loan based on either 12 or 24 months of either your business or your personal bank statements. So this is a great loan. I've closed a couple of loans for clients just using their bank statements. And what I usually do is I usually get 2 years of your bank statements, 24 months, and I basically do an analysis if a 24-month loan would be better or if a 12-month bank statement loan would be better. I will admit you get better terms if you use all 24 months, but sometimes when I'm doing these calculations for my clients, we determine that, hey, 12 months is probably going to be best for you to actually get approved. So next, P&L statement. You can have your CPA produce a P&L statement and you can get a loan based on that P&L statement. Between you and me, if you're going to be using your P&L statement, you might as well just use your bank statements. It's easier to do, but I do know that there are some people who would just rather use their P&L statement. Final thing is asset depletion loans. If you have stocks, for example, or a 401k or something that's like liquid cash, and you have more than 5 years of payments, if you have more than 5 years of mortgage payments in the bank, you can get something called an asset depletion loan. So let's say, for example, to keep the numbers easy, your mortgage is $1,000 a month. So for 5 years or 60 months is $60,000. If you have a Fidelity account, and you have $60,000 in that Fidelity account, after you have paid the closing cost and the down payment, if you still have that 60 grand, then an asset depletion loan is something that is possible for you. So again, you could call it, text us 571-583-4600, and we would be more than happy to chat with you with regards to mortgages for self-employed people. Thanks so much and have a blessed day.